A blizzard hitting Wall Street of sorts yesterday. Snowflake shares more than doubled in its market debut, making it the biggest software IPO ever. Leslie Pickard joins us now with more. Blizzard usually is a bad thing. In this case, it's a very good thing, though actually you could debate that. Given what it may or may not mean.
That's right. And blizzards also don't usually come in September, but it is 2020, so here we are. But you're right, Andrew. It's the biggest software IPO ever, the biggest IPO of the year, and the biggest first-day jump for an IPO that raised more than $1 billion, in about 2 decades. Snowflake certainly made history in many ways yesterday. The data management company raised $3.4 billion by pricing shares more than 40% above the range it had initially been marketing. By the end of the day yesterday, Snowflake shares soared 112%, giving that company a $71 billion market capitalization. The payoff was big, at least on paper, for some early investors. CEO Frank Slootman sitting on a stake worth nearly $4 billion now. Mike Spicer of Sutter Hill Ventures, an early backer, has an $11 billion stake. And Warren Buffett's Berkshire Hathaway more than doubled its money in one day to hold about $1.6 billion of Snowflake. Now the question for investors, especially those who bought at the higher levels yesterday, is whether Snowflake can really sustain this momentum. At the IPO price, Snowflake was already the most expensive software company to debut on a forward revenue basis. Yesterday's move more than doubled their multiple, of course, and shares are already lower pre-market today. Kelly?
I mean, they're lower 3.5%, but you know, it was an amazing move yesterday, Leslie. And it was interesting to talk to people about what they thought, because it happened on Fed Day, and it was kind of interesting to draw the line. Is it because of all the Fed liquidity that, people it's sloshing around, and here it is, pouring into the IPO market? But I thought Brian Belsky made an interesting point. He said he thinks it's portfolio managers who are overweight, Apple and some of the FANG names. They're desperate to have another growth story. Here's my question, Leslie. When's the first time you heard of Snowflake? Because for a lot of people, they're thinking, the first time was about 2 weeks ago.
Yeah, I think it was last year, just kind of the buzz about what companies could be prepping to go public. That one was brought onto my radar. But you're right, it wasn't a well-known company. I think one of the big attractions for this company, for investors I speak with, it really hits to what you were speaking about earlier with regard to the fact that, you've got this tremendous concentration of tech companies in the S&P 500 right now, more than you've seen in decades. And so portfolio managers, especially as they're heading toward the end of the year, are looking for ways to generate alpha and show outperformance above and beyond those names. This company came out. They have tremendous top-line growth, almost 3 times in 2019. And then for the first 6 months of the year, that growth was still more than double what it was in the first 6 months of the year last year. Now, still unprofitable, tremendously unprofitable. They're actually spending more in sales and marketing than they generated in revenue. But people see this as a scarcity play. They do have that top line growth that they really can't find elsewhere in the market.
And I know you've been asked about this 10 times Tuesday, but again, do we know how and why Berkshire got such a large piece of this? I mean, it's just so unlike them.
Yeah, so you're right. It's not like them at all. And it's interesting. A lot of reporters are trying to figure out exactly who is behind this. Is it Buffett himself? Todd Combs is the one who signed the paperwork with the SEC identifying Berkshire as a Hathaway. So that might provide some clue. But interestingly, they took a $250 million private placement alongside Salesforce. Then they also participated in purchasing 4 million shares from the former CEO of the company in what's known as a secondary offering in conjunction with the IPO. So all of that took place at the IPO price. So,
wow, $245, right? So they would have paid, double what that's amazing.
Yeah, nice day for them.